if we look at the asset allocators, there is the one end of the Yales and the Princetons who might be allocating close to 70 to 90% of their assets with alternative asset managers. And then there are the ultra high net worth investors who could have less than 10% allocated to alternative assets. And that really is an opportunity that alternative asset managers have in front of them to go after these pools of capital that can expand their investor base. Has to grow his investor base, and actually there's a very large pool of investors out there, but what happens is these investors are not investing, and a lot of them are not investing in alternative assets, and there are many reasons for that, but at the end of the day it comes to a question of trust, it comes to a question of transparency, and the asset allocators are not comfortable working with a new asset manager, with a new portfolio manager. So how do you break that cycle of trust? To break that cycle of trust, you need to demonstrate to your partners that you are building out, you're thoughtfully building out a large enterprise. You're thoughtfully building out for the long term. You are going to be managing his money very, very closely. Not only are you going to give him the right returns, but you have the compliance, the regulatory requirements, the controls, and all of the systems in place that can help you manage and provide that value that the limited partner is looking for. And those are very essential components when he is going to be investing in you. Technology that every asset manager uses, and which if you go to any website you will see, it's called the LP portal. And the LP portal is essentially to communicate to your LPs about what the different documents and what's the composition of the portfolio. Now, this technology has remained the same for close to 20 years, and what we see is amazing. There is absolutely no advancement to this technology in terms of what the LPs can access. But the structure of the funds have changed. I mean, the LPs are in multiple funds. The LPs are co-investment partners. Now they actually or they could be directly investing into an asset along with the general partner. They need to have much more information, but that change, that need has not percolated to the technology itself. And I think that is where technology and the products that are out there need to change, need to get to the level and understand what these businesses are doing and what the different partners, the general partner, the limited partner, what their needs are and how their needs are going to be met for the future, because these funds will become more complex.